All right, let's get right into it and look at Rivian Automotive, ticker RIVN. The U.S. markets are closed for the week, and this stock had a brutal end to Friday's session, November 14, 2025. It closed at $15.11, which was a nasty drop of 7.81% for the day. In the after-hours session, it managed to claw back a tiny bit, 14 cents, to land at $15.25. Now, when any investor, whether they're on a Fidelity trading platform or just checking their Robinhood app, sees a 7.8% drop, the immediate reaction is panic. The expectation is that this is a red alert moment, that some catastrophic news about production or a massive recall or a key executive quitting just hit the wires. The assumption is that the company is in freefall. But let's be very clear, this is Rivian. And the reality of this 7.8% drop is one of the most perfect and most misleading examples of market disconnect I have seen in a long time. That 7.8% plunge had absolutely nothing to do with the company's current performance. In fact, it was the exact opposite. It was a ghost from the past, an echo that just created what might be a monumental misunderstanding. For years, the common narrative around Rivian was simple. It was the other EV company. It was the one backed by Amazon, the one with the cool adventure trucks, the one that might actually be a legitimate competitor to Tesla stock. The R1T and R1S are incredible, high-performance machines, but the story was always overshadowed by one terrifying question. Could they ever build them profitably? The belief was that they were on an inevitable path to bankruptcy, a company that was brilliant at design but fatally flawed at manufacturing, burning billions of dollars every quarter just to stay alive. This was the expectation set by the stock's 90% collapse from its IPO highs. The reality, as shown by the company's own data from just 10 days ago, is that this narrative is now completely, fundamentally broken. The old story is dead. On November 5th, Rivian reported its third quarter 2025 earnings, and it wasn't just a beat, it was a rewriting of the entire company kind of report. They beat analyst estimates on revenue, pulling in $1.6 billion. They beat on earnings per share, losing less than anyone expected. But that's not the headline. The headline, the one that should be on billboards in Times Square, is that for the first time in its history, Rivian posted a positive gross profit. It was $24 million, which is small, but it's not the number that matters. It's the sign. It's the plus sign. It proves the thesis. It proves they can make money on their vehicles, a feat that many, including myself, were deeply skeptical they could ever achieve with the R1 platform. And it gets better. The cash burn, the great monster that was supposed to eat this company alive, is being tamed. Their free cash outflow for the quarter was $421 million. That sounds like a lot, but for Rivian, that is a stunning improvement. This is not a company on the verge of death. This is a company that is, against all odds, starting to execute. But wait, there's more. The report revealed a brand new revenue stream. Software and services, which generated $416 million in revenue and a whopping $154 million in gross profit. This is the Volkswagen deal. The joint venture they set up is now a year old, and it's already becoming a high-margin software business that Rivian can now, with Volkswagen, license to other automakers. They're building a new high-margin business inside the old one, much like Apple stock built its services division. So, if all this amazing company-altering news came out 10 days ago, why on earth did the stock just collapse 7.8%? This is the disconnect. That drop, that wave of panic selling, was triggered by a single SEC filing that hit the wires on Friday. It showed that Soros Fund Management, one of the most watched funds in the world, had sold its entire stake in Rivian, all 35 million shares. The market saw this and hit the panic button. The expectation is, if Soros is out, I should be out. But here's the reality, and you must understand this. That filing was for the quarter that ended September 30th. This means Soros' fund, or at least the manager responsible for that trade, dumped their entire position before the Q3 earnings. They sold before the positive gross margin. They sold before the $416 million in software revenue. They sold before the company proved its old narrative was dead. The 7.8% drop on Friday was the market's reaction to an old, outdated decision made by a fund that completely missed the single most important inflection point in Rivian's history. This is the kind of situation that professional traders on Interactive Brokers dream about, an information vacuum, a total mismatch between price and reality. While retail traders on Robinhood stock trading platforms were panic selling on a headline, the pros were likely looking at their screens, pulling up that Q3 report, and seeing a profound dislocation. This isn't investment help, this is just an analysis of the facts. The facts are that the stock just got hit by an old piece of news that has been completely superseded by new, much better fundamental data. This isn't a stock you'd put in a safe Fidelity mutual fund or a Schwab Intelligent Portfolios account. It's still far too volatile. This is a high-stakes bet in an individual brokerage account. And the stakes are enormous. The competition is not sleeping. Ford's F-150 Lightning is the best-selling electric truck in America, period. It has the brand, the distribution, and the trust of legacy truck buyers. And then there's the Cybertruck from Tesla stock. While its production ramp has been comically slow, it has a cult following that cannot be ignored. Rivian is fighting a two-front war against the most powerful incumbent and the most powerful disruptor on the planet. This is why the R2 platform is everything. The R1T and R1S are incredible, high-performance halo cars. The R2, their upcoming smaller, cheaper, mass-market SUV, is the Model 3 moment. It's the vehicle that's supposed to take Rivian from a niche player to a global powerhouse. And the news on this is also good. CEO R.J. Scaringe confirmed the R2 is on track for a launch in the first half of 2026, leveraging the new software and zonal architecture from the Volkswagen partnership. This is the ultimate bull case. The bear case? It's still that cash. Even with the improvements, $7.09 billion in cash when you're still losing hundreds of millions a quarter is a clock. It's a race against time to get the R2 scaled and profitable before that war chest runs dry. The new Georgia factory, which is the key to mass-scale production, isn't projected to be fully online until 2028. That's a long way away. This is a story of two different companies. The old Rivian, the one that Soros' fund sold, was a cash-burning, pre-profit company. The new Rivian, the one that exists post-Q3 earnings, is a company that has achieved positive gross margin, has a new high-margin software business, and is executing on its plan. The stock price at $15.11 is still reflecting the old story. The market has not yet priced in the new reality. This is a defining moment for the company. The R1 platform has been vindicated, but the entire future rests on the R2. So, how many shares of Rivian are you holding, and are you betting on the R1 or the R2 platform for the long haul? Comment below. To wrap this all up, that 7.8% drop was a mirage. It was the market's hysterical reaction to old news. The expectation was that this was a sign of new failure. The reality, based on the company's actual Q3 report, is that Rivian has never been on more solid footing. It has achieved the impossible, positive gross margin. It has a massive new partner in Volkswagen. It has a clear path with its R2. The only question is whether it can win the race against the clock and against the Goliaths in Detroit and Texas. This $15 stock is the center of one of the most intense battles between an old bearish narrative and a new bullish reality that exists in the entire market. Disclaimer: This content is for informational purposes only. It's not financial advice, so don't make any decisions without doing your own research or consulting a professional. If you found this helpful, don't forget to like, comment, and share. Stay smart with your money.